A lot of people ignore supply in crypto, but in my opinion, it's a very important thing to understand. So hey everyone, welcome back to Upside Down Data. Today I want to talk about HBAR and why I think understanding its supply dynamics are really important to understand its not only its price movements, but also the overall value of the network that the market is placing. So when we look at just the price chart for HBAR, one thing that we might think just looking at this is that right now, HBAR as it trades at about 4.7 cents, that currently the market values HBAR at the exact same level that it valued it back here in August of 2020 or December 2020. Price is back at those same levels, so you might think, okay, that means the market thinks that HBAR is now just equally valuable to where it was back here. And though that's the case for an individual HBAR, the market is valuing an individual HBAR at that same level, there's actually more to this story than just that paints a bit of a different picture. So let's talk about it. So I want to flip over to the market cap for HBAR. And so market cap is defined as the price, in this case of HBAR, multiplied by its circulating supply. And that supply element is going to be key here. When we look at this chart, notice how different this looks from the price chart. The price chart, we're basically back down at levels from August 2020. With market cap, we are way above the levels we were back in 2020. We're currently up at 1.48 billion roughly in market cap, whereas back in August of 2020, we were down at about 260 million. And so that suggests is that overall, kind of HBAR in the aggregate actually has quite a bit more value potentially right now, or there's still more value that's kind of being represented there than was all the way back here, even though the price is exactly the same. So why is this happening? How is this possible? How can we have it that the price is back at this level, but the market cap is so different? Well, the key thing there, as I said before, is supply. If you've been following HBAR, if you know about the supply dynamics, you know that it has inflated a lot in the last couple of years. And by inflation, I just mean token unlocks. This is something that's just baked in. It's not unknown. It's not secret. Is always the case with any protocol, and HBAR being any one of them, that they have some max supply. In HBAR's case, not all projects have max supply. HBAR does, 50 billion. But obviously, those need to get released somehow on some schedule. It's somehow those 50 billion are going to get out into circulation. It turns out with HBAR, a lot have been unlocked ever since, for example, August of 2020, where that was down at about 5 billion. We're now up above 30 billion. So roughly a 6x increase in the number of HBAR that are out there in the circulating supply. And this is how we end up getting this dynamic that we're seeing here. Because the way that you can look at it is that with this massive amount of new supply that's out there, or increased supply relative to back in August of 2020, that there might be more sell pressure. And there probably is more sell pressure. There are more HBAR out there to be sold. And so therefore, there's more available HBAR that have to be bought. And so what that means is that for price to stay up at the current level back here, there needed to be more demand coming in to buy up that extra supply. If demand was exactly the same as it was back here for HBAR, and we have suddenly a massive new amount of HBAR that are out there, then if demand had never increased, you actually would have expected price to fall way lower than it is now. You'd be way lower than it was in August of 2020, because there wouldn't have been enough demand to eat up all that extra supply that we now have, and that would have driven price down. And so really that's what we're seeing play out here in the market cap, where even though we have a massive new amount of circulating supply, price is still high enough so that on aggregate we're seeing a higher overall valuation than we were back here, even though price is at the same point. You can also think of it this way. It's more impressive that HBAR is valued at 4.7 cents now than it was back here. Because back here, people were only fighting over 5 billion HBAR. Now they're fighting over 31 billion HBAR. And so essentially, for price to retain that place, that same price level, more demand, more people, more money is likely had to come in to buy up that new demand, keep the price at that level, continue to buy whatever sell pressure there might be amongst that much larger circulating supply. Because remember, the price of an asset is dictated by supply and demand. We know that supply is increased massively. That also means that demand will also have to increase a lot to keep price at the same point. Lower supply, lower demand to equal 4 cents. Now, higher supply means higher demand to equal the same point. I think that's an interesting thing. It's something that's really critical to understand, is that for an asset like HBAR, we've had so much inflation. It's useful to understand how the value of the network can deviate from the value of the individual asset, or more specifically, the value of all tokens can kind of massively differ from the price here. And so I think, there's different ways we can think about it. The one way you can think about it is that kind of on the positive side, it means that we can see that demand for HBAR has increased over time. And we've talked about why that is. That's how you get this market cap being higher here than back here. That's how you have price be the same point as back here, despite the massive increase in supply. And so that means that HBAR overall, despite its price not looking so great right now, is actually more valued overall than it was back at these previous levels. But then, of course, the negative of that, the flip side, is that for the individual asset holder, that's not so great. If you're not someone who's been benefiting from these increased token unlocks, or you're just getting new HBAR released to you, then you're just seeing yourself get diluted, basically, where you bought in when the supply was considerably lower, for example, and now supply is way higher, and that has been putting downward pressure on the HBAR price. And so even though overall HBAR is more valued than it was back here, that might not matter to you if you're a token holder wanting for HBAR's price to go up. Because again, the overall value, the market cap, is different than price. And so if you want price to go up, that's not such a good dynamic for inflation to be affecting HBAR to such a degree. So I think the question then that's important is, we've seen a lot of unlocks for HBAR so far. Is this going to continue into the future, or are we getting near the end? Is this dilution going to continue where more and more HBAR supply is getting unlocked, which then might create more sell pressure, can at least, very least, suppress Bitcoin's price, or not Bitcoin, HBAR's price? Is that likely to slow down? So let's go over here to Token Unlocks, which is an app. It's a really great app to look at the different kind of vesting schedules for different projects, looking at HBAR here right now. And so they have this kind of listed out through time. You can see where we are right now. We're getting close to the end of the announced token unlocks. Now, there are actually going to be more that aren't announced. This is not going to get us up to the 50 billion mark by the end of this right here. But at least of the ones that have been talked about and announced, we're getting towards the end. There was one that happened recently, back here in the beginning of June. If you've been following, you probably were aware that happened. There'll be another one that happens in September. But then things are going to kind of level off a bit more. Now, again, there's still going to be more HBAR to be released to get us up to 50 billion. But at least in terms of what's announced, that will be getting us up to the end. But the other thing that's important to note is where these unlocks have been coming from. And a lot of them are coming from this ecosystem kind of development. So that would be things like the grants that the foundation puts out, that a lot of different projects use to try to get their use case up and running, things like that. Also governance and network operations. And with those increased, unlocks, those kind of new HBAR that hit the supply, it is probably the case that a lot of them are getting sold because they're being used to fund those different things, either just things about the network and network development in and of itself, or other projects, the ecosystem development. They're probably selling a lot of those HBAR to fund operations, though some might be used to facilitate the operation of them, but a lot of them are probably being sold. Probably another reason why we've been seeing HBAR's price getting held down. So those are the kind of the data. That's just the facts of it. And I know that people get mad about this. They get mad when you point out how there's can be supply dynamics that don't work in the favor of token holders. I'm just reporting it how it is. I'm sorry to say this is just the way it is for HBAR. It's just the way that the network is set up, how the unlock schedule is set up, that this has not been great for HBAR's price. But if we take a longer term view then, so we kind of zoom out from where we had been and we kind of take a longer term perspective, how negative could this be for HBAR going forward, or might it matter less? And really the question that all boils down to is supply versus demand, as I mentioned before. And that if demand gets to a high enough level, then that can actually overwhelm the increase in supply. We saw that in the bull market back here, 2020 and 2021, where we had this massive unlock of new supply going into those, going into this time that, supply was increasing that whole time. But yet, the price of HBAR was able to overwhelm that increase in supply up through there. But then, of course, we hit the bear market, demand waned, and we came all the way back down. Although, again, as I mentioned before, demand is still higher now than it was back there. And we can see that showing up because of these other things that we've just been talking about. But I think what you can think then is that that could happen again. There could be another time in the future where demand for HBAR really explodes that could end up allowing it to have nice price movements, despite the fact that the circulating supply is now so much higher. And so if you just look at usage of the network, certainly we're at a much better space now than we were all the way back before the last bull market. The last bull market was pretty much just all just speculation and hype that drove the price movements, as was the case for pretty much a lot of the crypto assets. Pretty much any kind of L1 project that was out there. A lot of it was more to do with speculation than it was with actual utility. Now to say there wasn't some utility that drove some of it, but really a lot of it was speculation and promise. What I think HBAR might be getting itself set up to do better in the next bull market, whenever that comes around, is having that actual real world utility. And so I think really with the thesis for HBAR is weighing this fact, it's just the fact of the matter that there's a lot more supply now, and that we know from supply and demand dynamics that is not going to be, generally speaking, a good thing for price if supply is increasing. But if your thesis is that there's going to be so much new demand for HBAR at that time that can overwhelm that supply, then that can still lead to having a thesis that HBAR's price will go up over time. But it's really going to be that demand aspect that's critical, and that's going to be important to evaluate. And so far with HBAR, a lot of this transaction per second is coming from relatively isolated use cases. So Atma.io is one of the ones that's really heavily contributing to this massive number of transactions per second that we're seeing on the network right now. We actually know this because they've done some maintenance. TPS had gone way down the last couple of days. Now it's back up and running and up here again. There's some other use cases that are also contributing, but it's one of the main ones that's contributing. And my understanding is so far they've mainly just been using grant HBAR, basically, that they got a grant of HBAR to develop the protocol. That's what they've been spending. And so that's probably another thing where this massive transaction per second has not really necessarily translated into actual demand for HBAR, because they're essentially using free HBAR so far. And so really what I think is going to be important to watch, with that use case in particular, but really with other ones, is that for ones that did receive grants, do they end up just switching over to purchasing HBAR themselves, which would then be a positive for HBAR's price? That would be that increase in demand that could help start kind of overriding some of the increase in supply that we've been seeing, or not. You'd hope that if they've invested this much into it, that they will continue, but that's something that would be needed to be evaluated. And that's really kind of where my stance on HBAR right now is that the really important part of a positive thesis about HBAR is that demand aspect. We know that supply is creating headwinds. We then really need to see a lot of demand to think that could offset the supply headwinds. So that's what personally I'm going to be watching for, is not only just projects that are already launched like Atma.io that are contributing to the TPS, but then also new use cases coming online and how much demand they bring into the space, kind of more enterprise demand. And then ultimately, that's going to have some effect during a bear market or kind of this lull phase. Then really in the next bull market, what it could do is provide that narrative that really brings in speculation and really drive price up even more. Because what you might imagine is that in the next bull market, people might care more about utility, real world utility. And if a particular chain is just kind of a ghost chain that's not really being used for anything, then if people compare that to one that actually is getting a lot of use, then there's a lot more narrative that you can spin around the one that's getting a lot of use, but why it's valuable, that could really drive up the price and do it, kind of getting this big move up that's not just a speculative promise-based, kind of hype cycle, but more of a here's a real-world utility narrative that drives its own kind of big hype cycle that then drives the price up. So that's something I'm thinking about. But personally, for me, when I'm evaluating something like HBAR, that's what I'm going to be thinking about. Now, the final thing I did want to mention about supply is that just because supply has been increasing doesn't mean that all of this supply is available to sell or is contributing to sell pressure. So the final thing I wanted to talk about here is about staking. And that's something that's important that HBAR released, not too long ago, but I think it has an important place in this conversation. And the reason I say that is that if we look at the staking ratio for HBAR, basically what percentage of the circulating supply is currently being staked, it's quite high. It's just under 70%. And so that means that 70% of this, 31 billion HBAR that's out there is currently being used for something, that people aren't just having it sitting in their wallet or sitting on an exchange, they're staking it and earning a yield on it. And the importance here is that staking creates friction. That if you're making a decision, do I want to sell my HBAR right now? If it's just sitting on an exchange, it's probably easier to come to the conclusion, yes, I want to sell right now. It's really easy for me to do that. It's right there, just a few mouse clicks, done, I've sold. Whereas if I'm staking HBAR, I have to think, well, I'm earning yield on it. That's good. I like that I'm doing that. And so then if I want to kind of not do that anymore, I need to make the decision I'm going to give up that yield, and I'd rather sell my HBAR now. And also, I'm probably going to need to move it to an exchange to do that, or I'd have to go to a DEX or whatever the case to actually sell it. Just more steps. It's more things that you have to do, more decisions that have to go all in that same way for you to decide to sell. And so what I can do is create, as I mentioned, friction. And so when we can look at this then, if we're thinking about the amount of HBAR that might be kind of sitting as being kind of easier to sell, a very simple way of doing it is just taking, that looking at basically 70% of that 30 billion would be the amount that's kind of really available to sell. And then 70% of that is a little bit less available. And so this is another thing that I like to keep an eye on is what is the staking ratio? If this continues to get higher and higher and higher, then it might mean that even though a lot of new HBAR have been hitting the market or have been available in the circulating supply, there's still a smaller percent that's actually actively being sold or being traded. And so in some ways you can think of the HBAR that no one's wanting to sell as kind of being irrelevant to that supply-demand dynamic. And when we're thinking about price being supply and demand, it's really the supply available to sell or that people want to sell versus the demand to buy it. And suddenly if you're taking a bunch of this circulating supply out of the equation because people are staking it, they don't want to sell it, they're not thinking about that, or just more friction for them to do it, then suddenly you need a lot less demand to be able to pull price up than if all 30 billion HBAR were actively right there for people ready to be trading it. So that's the other thing that you have to keep in mind with it is that increased supply, generally speaking, increases the likelihood of sell pressure, but it doesn't have to if other factors are out there, like if people just don't decide that they don't want to sell it. That is another thing that can also contribute. And so this is why, kind of in aggregate, to sum us all up, I think understanding supply dynamics is absolutely critical, nuanced, multifaceted, and really can help shape, a narrative or a thesis about a project. Where understanding that more demand has shown up because price is where it is back here, given the different supply, but also understanding the supply can increase sell pressure, then also understanding that because of that, we then need to think about where are those new drivers of demand going to be that could bring HBAR's price up further. All of those things, in my opinion, are important to consider, not just for HBAR, but any crypto asset that's out there, to think about whether or not it's feasible or realistic or likely or how likely it is for that asset to trend up with time. And so I think with HBAR, advantage it has over a lot of other projects out there is that it has started to get this real world use case adoption, which a lot of other assets can't have. A lot of other L1s can't claim that. But then the critical element is, will that continue and will that grow enough to increase the demand that once we've adjusted for maybe potential factors that will reduce the kind of, supply that's there to be sold, to really allow HBAR to be able to move up in a very meaningful way, which I think a lot of people want. For it to get to that $1 mark, a lot of people look at, there's probably going to need to be that more demand coming in there. That could just be HBAR surviving to the next bull market and just getting a lot of speculation to drive it up there. Or it could be, in my opinion, what's more likely, probably both. Gets more use cases, gets more underlying actual real world demand that's more than just speculation. Then also some speculation comes in to drive it, a bit further. So to be clear, I'm not saying this to paint a positive or a negative picture about HBAR. Ultimately, it comes down to the individual investor to make the decision of whether or not they think an investment is good or not. What I want to make sure is that people are aware of these things, because I don't see people talking about this at all. People just kind of ignore it, or they just kind of brush it aside and say it doesn't matter. And in my opinion, these things very much matter. They're very important to keep in mind. And really, you'd hope that anyone making an investment decision is making it based on all the data available. And so really, I hope that people at least think about supply and at least make an informed decision. And it could be you decide supply doesn't matter to you, that you think that it doesn't matter, it's ultimately not going to be mattering. That's fine, but I still think that people should at least be aware of it so they can make that decision instead of just not even being aware of it at all and not knowing. All right, so that wraps up what I wanted to talk about with HBAR. I think a lot of interesting things to think about and talk about when it comes to its supply and demand dynamics. So to wrap us up, I wanted to talk also about our website, polaritydigital.io. We recently launched our Polarity Digital Pro subscription service where you can get access to our risk models, our trend models, our forecast models for HBAR. and a bunch of different assets. I think it's about 37 different assets we have support for right now. We're going to continue to add support in the coming weeks and months for more assets. And so that's something like, for example, what I'm showing you here is our medium-term risk model for HBAR to help you identify when HBAR is getting overheated, high risk, and likely to for price to move back down, and then also low risk when price is likely kind of exhausting the sell pressure and some upward movement is likely to be expected. So that's one of the things we have there amongst a bunch of others. Link to the website in the description. If you like the content, of course, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.